Hey everybody, this is Dennis Wilborn, the Active Trend Trader. I want to welcome you and let you know how grateful I am that you are here with us on Instagram for today's session. Um, the market was doing a lot of crazy stuff today, and so I hope you were keeping up. One of the things that I like about the markets when they do this is basically they flush out excesses, and that's exactly what we're looking at it do as we take these little forays down to the downside. Now, is the market going to continue going down? Good question. All of the indexes finished, in a little bit different area, and so we'll take a look at that here shortly. Let's go ahead and jump over to today's session. Let's start off with the S&P. Before I get started on the S&P, I just want to give a shout out to a young man, and his handle on Instagram is Dr. Stocks. That's Dr. Stocks, Stockz. And so he is a day trader, and he does a lot of good, interesting content. I suggest, hey, take a look at him, take a look at his content, and again, if you're looking for short-term time frames to be trading, he is basically a pro at what he is doing, and a lot of fun to watch. If you watch some of his other posts, you can tell he's actually living life large and having a good time as he goes. So let's see, the S&P. S&P, this is a very interesting, it basically finished off where it started today. Now, normally we'd like to call this a hammer. We would like to call this a hammer, but it's kind of difficult to call it a hammer simply because of one thing. It's not reversing a downtrend. At the same time, though, what has it done? It has basically come down here to, we talked about this over the weekend. It came down to the 23% retracement on the Fibonacci from this low to this high. And then it stopped. And so we basically have fallen down. Now, price actions did finish up and stopped below what? The 8-day moving average. So that's a first indication that we may be getting a jackhammer effect. The jackhammer effect is what I call the hammering down on top of the moving average until eventually they roll over totally, and then we get a failure to the downside. As you can see, the 8-day moving average cost, it basically rolled over today. What happened when prices came barreling back up? It stopped square dab at the 8-day moving average and reversed. Now, again, hammer, but it's not a quality hammer is what I'll say. It is not a quality hammer simply because it's not reversing a downtrend. That's the big, huge thing about it is. Now, if you'll remember correctly, on Thursday of last week, we said that this candle right there was a hanging man. Yes, it's the shape of a hammer. However, its location was at the end of an uptrend, thus making it not a bullish but a bearish type of reversal signal. And then we get a fulfillment down to the downside, although buyers did come in. Buyers came in on cue right at the 23, about the 23% retracement. So what's my plan for the S&P right now? Actually, kind of nothing. If it hangs right there, I will look to basically short it back down to the downside. Take a not short the S&P, but take a bearish position. The TSI, the momentum is pointed which way? Down. There's not a reason, there is no reason to take an upside trade until we are either at a level of strong support. We've got the one there at the 23% retracement, and the TSI, the True Synth Index. Some of you might use the forecast, the market forecast, and also the MACD until it starts to make a positive move, showing that the momentum is shifting back up. That's what we've got going on with the S&P. The Qs, on the other hand, Qs Q's ripped to the downside today. I mean, folks, it basically broke down. It gapped down to the $333 level, and then continued falling. Blah 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 blah. Dropped all the way down below the 50-day moving average. Stopped just before the 50% retracement of the high to low, from this low here up to this high. Just below the 50, just above the 50% retracement, did pull back up above the 50-day moving average, and so if on a sense of buyers coming in, since we are finishing up right at about the middle half of the day's range, slightly to the upper side, I would give it a slight bullish tinge. However, this is not a bullish reversal signal. It is not a bullish reversal candlestick. Now, you may want to pop over to the shorter time frame and check it there, or also pop out to the longer time frame. And I realize that today's candlestick is not, or this week's candlestick is not complete, but I've got weekly percent index has rolled over from last week. That is not a sign of strength. And so where am I anticipating? I'm not anticipating it to fall, out of the sky and, go a long way, but we may get a complete 100% retracement from this high to low previously. And so I would not be surprised to see that. I'll watch, one of the things you can also do is if you go to a 30-minute chart or a 15-minute chart, wait, you're going to look to trade the Qs back to the upside. Wait until you get a shorter term time frame, new uptrend, a fledgling uptrend in place. And what does that mean? You want to get a series of higher highs, higher lows, at least one under your belt before, of each of those, before you basically say, the momentum has shifted. What we got going with there? Next, the Russell. Okay, the Russell is showing us, kind of a little bit of interesting stuff here. Is that the Russell opened here at the 224 level, just at or slightly below the 20-day moving average, came down, tested against close to the 50-day moving average. And then it's still above this uptrend line, so that's a positive. However, DSI heading to the down direction. The day basis, the weekly it's been under a momentum drain for quite some time now. However, price's action is in reality on the longer time frame has just pushed sideways. And so the question every trader has to decide for themselves, is there enough room on a either daily basis and or a weekly basis? When I say room, is the range enough? So we got a $5 range today. And oftentimes, if I'm getting $5 on a ETF, an index ETF, you can set up some trades to do pretty good either on a shorter time basis. I am not a day trader. I am a swing trader primarily. Last week we set up actually we set up some trades on the Qs that took advantage of the move down to the downside. And so let's see what else is going on here. That's about it. There's nothing really to write home about. Momentum is still pushing down. Similar to the, if we take a look at the S&P and that type of stuff, similarly, with the momentum heading down, we basically want to look for retests that are back at levels of support / dynamic levels of support made up of both the trend lines and the moving averages. This line that I drew back here to the middle section of that candle right there, when it bounced back up, that's still in play also. Another thing, a couple of things to pick off of this chart to notice. The gap ups on the way up have now been closed. So those gaps are in fact closed. The downside to the downside. Basically, all I have on the IWM. If you were a premium or a top autopilot trading person, you know that we jumped on into a trade on SQQQ, and that's the inverse ETF. We jumped in it down here at about $10.80, and it actually hit our first target with about a 10+% gain today. And so we took that percentage, that gain off the table, and now the rest of the trade, I won't say it's a freebie, but since the rest of the trade now is set at no worse than break even, in other words, the stop loss becomes what we paid to get in. We'll just watch to see where it goes from here. We've got a nice gap up, and if we continue to press higher, ultimately on our target number 3, looking at a 25% gain on this one. Okay, I have 4 stocks we're going to run through really, really quick that got just hammered. Not well, some of them got hammered, but they were impacted to the downside. But they may be moving, we're going to watch them. SQ. What the heck happened to SQ? It failed to the downside. It failed right before earnings, which is the 6th after the market closes, which is Thursday of this week. Interesting. Oftentimes, when you get a failure like this, just prior to earnings, it's a clue that somebody may know something's going on with earnings that's not going to make the shareholders of Square very happy. Also, in the same kind of package with Square is our buddy PayPal. They're in the same space. So PayPal, what happened with PayPal today? Similar type move. Hammered down. It also, earnings went. Earnings actually tomorrow after the market closes. So who knows? It also hammered to the downside very succinctly. This is kind of a, take a picture of this particular pattern because it's really classic. Is basically we get a push up. This is a nice, strong, tradable push up. We came back to the moving averages. Now, on a pullback, if you're a pullback trader, that's where you get in. However, then on the rally attempt, what happens? The rally attempts up, fails to get to the past highs, fails, and then drops. Very, that is a strong, here's an oxymoron. That's a strong strong indication of weakness. Very interesting. Let's see. The other ones that we're watching, Tesla. We were in a trade on Tesla with our premium members, and basically we broke below this swing low. Now, what has happened now, we broke below this swing low here. That was a bullish, what we thought at the time, a very strong bullish engulfing pattern. And as soon as we take out that low, that voids reversal, that bullish reversal pattern off of the bearish engulfing pattern. So we may set up for another. Oftentimes, when you get a move like this, you will get a first indication that, hey, yeah, I want to go positive on this. Then that fails, but as you can see, buyers have now come in at a slightly lower level and pushed back up. That is, today's signal is really close to being a hammer. TSI has not reversed to the upside yet. Okay, I've got 2 other ones to share with you. One is Mara, M-A-R-A. Real big questions on this, on Mara. One, it's got earnings coming up over here on the 13th before the market, before the market opens. And so I was anticipating a move back up to the upside. However, may not happen, but it could happen. Well, why? And if this current low that it just hit today, if that turns out to be a higher low, we could get an indication that we can jump on a trade here soon. So that's almost, it's not quite a hammer, but it does show where buyers came in. And where's that? It was right at the top of this candle over here, which was a strong bullish candle to the upside. So there were buyers sitting right there and ready to pounce, and they pounced and drove the prices back up. Do we have a reversal signal? No, we don't. So look for a retest, but we'll be continuing to watch Mara. I would like to jump into Mara if possible. With that being said, Mara's cousin or Mara's running mate is Riot's also. It came down and tested past support down here. We'll see if it reverses up and through. Not quite a hammer today, but it's looking fairly positive. TSI pointing down, so it really is kind of a toss-up on a weekly basis. Weekly basis, TSI is still pointed down. So until we get everything in sync, we will be wanting to just keep our eye on what's going on with that, with Riot. May give us an opportunity in the future. Sometimes when the market's doing what it's doing, you have to look for sleepy stocks. And I'm calling Dick's Sporting Goods a sleepy stock. We had been in Dick's Sporting Goods over here at about $81 off of this Dragonfly, nor this Doji, not Dragonfly, but this Doji almost hammer. We had been in from about 81.60-ish. Check. A wrong number here. Dick's. I'm sorry, 83.58 is where we jumped into Dick's. 83.58, and that was over just about, I think, on these pullbacks in here. Yeah. We jumped into a trade on Dick's, and we had taken out some profit, and it withdrew. We're still maintaining our stop loss down here below this $80.50 level. But as you can see, we have a nice reversal off of Friday's. This was a really nice looking Dragonfly Doji or a hammer. And we shot up yesterday. And then again, what happened today? We pulled right back down into the 8-day moving average. It reversed off of there and went higher. So we actually opened higher, sold off, and then had a really strong rebound in the afternoon. And again, Dick's, it's a sporting goods company. I don't know if you've ever been to Dick's, but they are doing quite well. They look at the weekly. The weekly charts look really excellent. And so, just pay attention. Sometimes you have to be willing to invest in both the potential of like a marathon. I mean, it'll move 30-40% very quickly. And then you got to look at a Dick's or a Schwab or other potentials that run that they run a little bit cooler. What I mean to say by that is they're not a hot running stock. The volatility is a lot less, and so it gives you a nice opportunity to trade it to the upside and just let it nice, slow and steady. Kind of like the if Marathon is the hare, Dick's or something like it, or like Schwab's, they're the tortoise. So with that, let's see what else we have. That basically is it for today, guys. I just want to say thank you for joining us. If you are available, we do have a 6:30 Pacific, 6:30 p.m. Pacific Bay Area Moneymakers meeting today. It is free. You just need to go over to the BAMM, B-A-M-M, meetup site. You can sign up there and get your password to the Zoom meeting. And then I'll go for about an hour and a half. I'm going to be presenting today on how to change, how to change your habits so that it can be more of a consistent, profitable trader. If that's something that interests you, jump over there and take a look at it. So until later, aloha. God bless everybody.